Welcome to SCHUMANN Insights. Today we're going to talk about international trade, a topic that's been making a lot of headlines in recent months, but also in recent years, of course, and it's a big topic in credit risk management. International trade comes back in our daily lives all the time. When you put anything into your basket, e-commerce or in your supermarket basket, it's likely that these goods have traveled somewhere around the world. They've crossed borders, been on ships, been on trains, planes. But obviously, when we travel, trade is everywhere, and it impacts our jobs as well. So we still live in a very connected and a very globalized world, where businesses work internationally and all over the world. And trade has been really good for the world, trade and globalization, because it brought a lot of jobs, it brings growth, and I think a lot of you watching will in some way in your work be connected to trade or even the financing of trade, which is a very important component as well. Trade has helped a lot of emerging markets also. It's lifted people out of poverty to have the jobs, do the manufacturing, and it comes back to economic theory as well. Comparative advantage. It's important that countries focus on what they're best at, what they're most efficient at producing. And it's the same for you as an individual. It's not worth doing everything, growing your own food, building your own furniture, everything. That's not efficient. You have to focus on what you're good at. And if everyone does that, that brings a lot of benefits to the world. And this has happened in recent decades. Trade is under attack though, and it started in 2018, probably maybe even a bit before, and we know Donald Trump started the trade wars. And it's something politicians have picked up on since then. A lot of our goods, medicines, food being produced abroad, isn't that dangerous? Isn't that scary? Shouldn't we blame the foreigners on any problems that are happening in the country? So attacking trade fits very nicely within a populist agenda. You know, the enemy is abroad. On top of that political threat, we've also had the pandemic, of course, which closed borders or introduced border controls in places that have had free movement for a very long time. And we've seen governments impacting shipments of PPE equipment, etc. So there was a lot of disruption to trade and making it a bigger headline as well. On top of that, this year we've seen the war in Ukraine, which had severe impact on, for example, the food industry. And people have now woken up to the fact that a lot of their grain comes from Ukraine, and getting it out of a country affected by war is obviously very difficult and will lead to poverty, inflation, impact all over the world as long as this disruption happens there. So there were a lot of negatives around trade. So there's talk about, is this the end of globalization? Should we become more inward looking? Shouldn't we be producing all our own food, reduce our dependence, or just produce it in countries close to us or countries that are friendly to us? It's called reshoring, friendshoring, etc. There's a lot of discussion about this. Is this good or bad? So I thought to give some perspective on this. You know, is this the end, or are there still a lot of good points? And I think there still are. We've had decades of just-in-time productions where companies had their factories all over the world, their supply chains, and worked on really tight margins in terms of goods moving from one place to the other, you know, to reduce inventories, which is good for profits and cash flows, and to really be super, super efficient, but not having any margin. What the shocks in recent years have taught us, so that pandemic, the war, is that maybe we need not just in time, but much more a just in case supply chain. It fits nicely with normal risk management. You want a bit of diversification, where your goods come from, where your parts come from, components, etc. Because we've all realized, no, you never know what happens. And if you don't have a margin for error, it causes a knock-on effect. So it's a bit of a natural movement. It's a bit costly. It will require technology, insights, some new ideas, but it might not be a bad thing. Trade also did really well throughout the pandemic. So if you take yourself back to early 2020 and we stopped going to restaurants, stopped going on holidays, stopped getting our hair cut because of the lockdowns, and we shifted all our consumption to goods, to equipment to work from home, to games to play at home, etc. You know, suddenly there was a massive shift. You know, it wasn't just you doing it, but billions of people all over the world. And trade coped really well with it. Yes, maybe you had to wait for a delivery here or there. You know, your headphones might have been sold out for a bit. But in the end, the system really coped, and e-commerce very much boomed. People have really moved on to buying things online, which is a positive, and it's something we needed for the future anyhow, and has brought a lot of businesses good fortunes. The vaccines we've all used throughout the world, and we've had billions of people vaccinated, had components from lots of countries and from lots of manufacturers, and we managed to pull them together within just a couple of months, circulate them, distribute them, get them into people's arms, and that's quite a feat. And we wouldn't have been able to do that if trade was a problem or was disrupted at all. It's much more interference of governments that impacts trade than that trade impacts governments or countries. You know, anything we do to disrupt flows of goods, to disrupt finance, to disrupt these comparative advantages countries have, those are causing problems, those are causing pain much more than trade itself or being reliant on another country. So I think we're rebalancing. As I said before, trade was maybe working too much on a fine tightrope almost to get everything together as efficiently as possible, and that tightrope had a shock. So to get your balance back, you're going to need a little bit of time. It's not so different from what happened to the banks, 2007 to 2009. They obviously thought they'd found efficiency in packing up mortgages and risk and leaving no margins and really changing the view of credit risk. But that was actually not able to withstand the shock that happened to the system in the economic crisis. Over time, banks have become much stronger. Within the pandemic, we've seen no bank runs or no banks wobbling. Most of them even managed to lend money to companies to help them weather the storm. So they've been a very strong component of this. And I think we're going to see that in trade and supply chain and globalization next. We're going to rebalance, we're going to find a bit more diversification, we're going to look a bit better at how we do things, and we're going to look better at, you know, what if a shock happens. So I think we'll come from this to a better place and much more balance. And I don't think we should see it's the end of trade. It wasn't the end of the banking system in 2007 to 2009. It was just a reshuffle, a rethink, and getting to a better place. And that's what's happening now. And I think it's a perspective we need to keep and we need to think about in risk management. We are in difficult times, we have uncertain times, but it's not the time to go back and look inward. It's important to keep looking outward, keep working together, but manage your risk efficiently, obviously.